Okay, let's talk about Nvidia, stock symbol NVDA. I mean, this stock has been on an incredible tear over the last 4 days, going up about 10% during that time. It's getting very overextended. So is tech, so is the mega caps, so is the entire NASDAQ 100, and alongside with that, the S&P 500. So what do you do right now? Because we had a pretty significant breakout today on the NASDAQ. Do you buy this? Do you hold off? What is the plan here? If you're in a position, should you be taking profits? We're going to go ahead and get into all of that and more right now. Looking at the chart on Nvidia, we have this move right here that took place. This is an important move because it takes us above this upper band here that had acted as resistance before. I wasn't sure if we were even going to get above that level today when we started testing it, but it really had no problem at all. And you can see there down below where it had just a ton of volume that came in to support the move. Underneath it, you have a very similar parallel channel that has formed. So you have an upper band and a lower band, and it's been able to push through as of today that upper band. Now, one of the things I would probably say is because it is so overextended that there is the possibility that it comes back down and this ends up being a head fake and it pulls back and maybe starts to fill some of these gaps. That's more it's pure speculation, I guess I would say. There's nothing there on the charts that says it's going to do that, but I've seen a lot of head fakes in charts in general, not so much with Nvidia, but just in general, that there's been a lot of false breakouts. So you want to watch out for that on Nvidia as well. If there is a pretty big, significant pullback, one area that I would be watchful for is this previous breakout level that took place back in July. We broke through it, came back down, tested it, broke below it just a shade where we tested the lower parallel line, and then we recovered in the days that followed. So if that happened, that would be a pullback to $172. Now, is that necessarily a huge pullback? It'll feel like a big pullback. It'll have a big consequence to the market. But we're talking about a company now that's pretty much on the precipice of a $5 trillion valuation. I mean, that's bigger than most countries that are out there right now. So the potential for that, when it's getting that overextended, yes, the possibilities of a pullback looms very large. Long-term wise, and this isn't something that I necessarily think that we're going to pull back to anytime soon, but it's still good to know your levels. And this would be one here down at the 109 level. That would be like a 50% retracement. That'd be absolute chaos on the NASDAQ, chaos on the S&P 500, Russell 2000. So that's not necessarily something that I'm expecting in the here or now or anytime soon for that matter. But still, if you do find yourself pulling back substantially on Nvidia, this may be one of those things where you'll be glad that you knew that this line was around. But again, we're hitting all-time highs here. We're not calling for massive corrections or anything like that. I'm not into calling market tops, but I am into identifying key support and resistance levels. And so this is the support and resistance that I would outline for you. Some might say, hey, you could probably draw a line like this here, but I feel like it's somewhat redundant just because it's involving these lines up here. So it's the same resistance essentially. Now, where I'm concerned about, and you'll see over here in the right-hand side of your screen, the list of sectors. You only had 3 sectors that are moving higher today. And right now, this whole market is based off of Nvidia. Yes, the other mega caps are helpful too, but Nvidia is the main driver, particularly over the last 4 days. And we're seeing some major divergences in the market as a whole. So you have SPY. SPY's running hot. It's making, for a third straight day, making new all-time highs. But when you start to look at this from a Bollinger Band standpoint, you'll see that, for instance, on the Qs, we're way outside the Bollinger Band. Now, this is 2 standard deviations of the 20-day moving average, and we're outside of it the last 2 days. On the weekly, the 20-week moving average and 2 standard deviations, we're also creeping outside of that as well so far this week. But not to be outdone, you have 2 standard deviations of the 50-day moving average, and you can see where we popped above that in September as well, started to pull back some for a little bit, for about 3 days or so, and now we find ourselves once again back above that level. Now, one area to watch, and we haven't broken above it just yet, but we're getting really close, and that is 3 standard deviations above the 20-day moving average on a daily chart. Very close to that. Now, if it gets above that level and starts creeping above that level, I would say that that's a surefire. No, I shouldn't say surefire. I would say that that's a pretty solid sell signal to start raising cash on. Now, You take a look at Nvidia, it actually broke above it there today. And that's not something that it's done much of in the past. That's also a pretty concerning sign, especially when you look at it on all the other time frames where it's breaking out and above all of these Bollinger Bands. Now, even SPY is doing the same thing. Very similarly, it's not breaking above 3 standard deviations on the 20-day moving average, but it is doing it on the 2 standard deviations for not only the daily and the weekly 20 period, but it's also doing it with the 50-day moving average as well down here on the lower left-hand side of your screen. So we're getting very overextended, but we're not seeing participation like we should be. This is really, again, just Nvidia, and to a lesser degree, all the other mega caps or the Mag 7, whatever you like to call them. And even today, where you had the other two that were in the green, XLB was only higher by 1.1%, and XLY was up by 0.02%. So it's practically flat. On a day where you have the S&P 500 up 0.3%, you look at RSP down 0.9%. Now, this is the equal weight. So if every stock had the same weighting on the S&P 500, this is what the S&P 500 would have looked like today, down 0.9%. Instead, because of the monstrous strength in Nvidia, it actually manages to rally 0.3% higher. You look at the number of stocks out of the S&P 500. There's 500 stocks, obviously, in the S&P 500. Only about 100 of them were trading higher today. That means 400 of them were selling off versus the other 100 that were advancing. So very little participation in the market. In fact, this is the worst breadth that we've seen in the market since 1990. So this is like uncharted territory. And then you look at the percentage of stocks trading above their 40-day moving average. It was down 9.9% today. And only 38% of stocks are even trading above their 40-day moving average, much less their all-time highs. You look at the stocks trading above their 200-day moving average, and that one's only at 51%. And that should be a lot easier to get back above than even your 40-day moving average. And even on this particular one, you have far too few stocks trading above that 200-day moving average. So there's a lot of concerns there, a ton of concerns. And that's why I've been very cautious over the last week or so with this market, because it's not providing great trade setups. And then two, it's not providing good reward risk opportunities. I feel like most of the trade setups that I come across right now, you're essentially risking $3 to be able to make $1. And that's not a good setup overall. Most of the setups are requiring you to make 10 to 15% stop losses. In order just to get a 2 to 1 return, you need to be able to validate or be able to expect a 30% return on your trade. And that's just probably asking a lot out of the market, where you don't have a lot of participation among other stocks not named Nvidia or Amazon or Apple or Broadcom or some of the other mega caps, or Tesla for that matter. So lots of concerns there. I don't necessarily think I want to be chasing at these levels. When it comes to Nvidia, I would personally be taking, especially from a swing trading standpoint, be taking profits off the table. I wouldn't want to necessarily be pushing my hand too far at this point. I think that the hopium and the FOMO that's in these stocks are at levels that are unprecedented. You have a AI bubble that's about 17 times bigger than anything that we saw during the dot-com bubble. And again, I'm not trying to call for a market crash here. This market could run all the way through the end of the year, and that's very possible. But what I am trying to say is just wait for the opportunities to better present themselves. Maybe we have a 5 or 6 day pullback, and that provides a better opportunity to get long on some stocks into the year end. But right now, when you're trading outside of all of those Bollinger Bands, and you're just seeing overextension on every time frame, whether it's the daily, the weekly, or the monthly, maybe a sign to say, hey, let's pull back some, let's cool off, let's wait for better opportunities where the reward risk ratio is more in our favor. If you enjoyed this video, and I hope that you did, make sure to like and subscribe to my channel, and let me know down in the comments below, what is your take right now with technology? We saw just even on XLK, 23 out of 68 stocks trading higher today, even though that the index was substantially higher, about to the tune of about 1%. Only a third of those were actually participating in that rally. So let me know down in the comments below, what is your plans with this market right now? I'd love to hear that. And Remember, Jesus Christ, he's the way, the truth, and the life. No one comes to the Father except through him. Thank you, and God bless.